A very good evening to you all, and welcome to the 18th episode of Market Replay. If you are tuning in for the first time, I'd like to welcome you to this episode, and I trust that you will enjoy it. Just to shed some light on what I seek to achieve through these episodes, and that's simply to share my perspective and my understandings of how to trade the Forex markets. And how I will be doing that is that I will be looking at a day's worth of price information in the form of candlesticks, and I will then be highlighting the specific trading opportunities that were present and how we could have capitalized on them, right? And what the possible outcomes might have been from taking those opportunities. To get right into it, for today's episode, we'll be looking at the United States dollar against the Mexican peso, and the date will be for the 3rd of August, which was this past Monday. Let's get into it. So as always, like with previous episodes, what I do is I'd like to start with a trend. So the day started off very bearish, and within that bearish segment we then had a period of consolidation, right? Like I always point out, these periods of consolidation are important to us because they represent pauses in the trend where we can then enter the markets, right? Following this, price then changed to the upside, and from changing to the upside we then had the formation of higher highs and higher lows, right? High low, high high, okay, and then we had another high low and a higher high, right? From there the bullish momentum then took a pause, right, with price moving sideways and giving us a chance to enter before they continue to the upside, giving us higher lows and higher highs, okay. Then had another brief moment of consolidation, before price then continued to the upside, okay, giving us our last burst of consolidation. Okay, and that was our trading day. Now, like I say, these moments of consolidation are very important to us because this is where we want to take our trades, right? Let's start with the first period and let's have a look at what was presented to us. Okay, so like I always say, is that you want to start on your left hand side before moving to your right. So in this particular situation, we had the formation of a support zone, right? And what a support zone does is that it enables us to identify our area of demand, right? That lets us know that we have buyers parked within this particular area of the market, and should price then enter this particular area, we then know that price has the probability of turning around and going to the upside. Following that, what we can then clearly see is the formation of a fake out, right? The classic fake out pattern. All right, and we needed price to close on the outside, pretending as if it's a trend change, and then close back within our resistance zone that comes from the highest time frame, right? And we can see that with the close of this bearish candle that we have over here, right? Now pulling out our modified Fibonacci tool, right, what we can then see is that we had a very rewarding setup. Let me zoom in, and by that what I mean is that, right, our minimum risk reward ratio that we aim for, which is 1:1, was way before our turning point, right? Our 1:2 way before it, 1:3, right up to 1:4, and 1:5 sitting within our zone, right? Now taking a sell position over here with a very conservative stop loss, what we can then see is that price continued to push to the downside, giving us a 1:1 risk reward return. All right, and holding it with a partial close of your position, price then moved and gave us a 1:2 risk reward return, right? But with a very aggressive stop loss, what we can then see is that price managed to push down, and it then gave us a 1:3, further moving down to give us a 1:5 risk reward return on this particular trade. So this was a very rewarding trade, right? That all resulted from a fake out. Very beautiful trade, very easy to take, right? No need to overcomplicate things. But this area that we have over here is very interesting, because like I always say, it's important that we learn how to forecast our history into the future, right? History tells us in the zone that price bounced back to the upside, and that's because we had buyers trapped within this particular zone, because price was then considered to be cheap enough for them to enter the market, right? Following that, we can then see price enter the zone and then bounced back to the upside, right? Fulfilling our forecast that this was a turnaround point, right? Can move on to the next one. Move lower, right? Same standard operating procedure. You start on your left hand side, and what we can then identify from our left hand side is the formation of a swing high, right? And what does a swing high give us? It gives us our resistance level, or better, it gives us our level of supply. And what that lets us know is that we have sellers that are trapped within this particular region of the market, and should price enter the market, there exists a probability that it's going to turn back to the downside, right? With that understanding, we then pull out our modified Fibonacci tool and forecast this move to the upside. Now remember, what we are interested in is a close below 50%, because that then shows us that our retracement is deep enough, right? And we had that achieved through the close of this bearish candle that we have over here. And further moving on from that, we then noticed that we just needed a close above this high before we could enter the position, right? Let's reforecast our Fibonacci tool so that we can have our TP forecasts, right? And taking a trade on the close of this bullish candle, what we can then see again is that this trade was well within our means. Our minimum risk reward of 1:1 was way before our resistance zone, and 1:2 was sitting within our resistance zone, right? Now that means that our 1:1 risk reward ratio has a higher probability of working out, because it's going to move to the upside uninterrupted. Okay, now taking a buy position over here, we can then see that price hit a 1:1, and utilizing a positive stop while closing a partial amount of the position, we can then see price then further moved on to push as far as to 1:6 risk reward ratio, right? This was another beautiful rewarding trade, very easy to take, and we did not need to overcomplicate things, right? Let's move on to the next one. Let me just clear up the charts, right? So next position, let's move on lower, same as always. All right, nothing changes. Start on your left hand side. What we have is the formation of a swing high, and what the swing high then gives us is the ability to forecast an area of supply or your area of resistance. With that understanding, we then pull out our modified Fibonacci tool, forecast this move to the entire upside, and what we can then see is that we have no close above or below the 50% level, right? And that simply tells us that the pullback is not deep enough, and we skip out on this trade. Even though it bounced off our 50% level and continued to move to the upside, we did not take this trade. Okay, simply doesn't meet our rules, and that's how it works in trading. Sometimes your rules are met, sometimes they are not. Sometimes they are met, and you have certain things that make you not enter the trade, and you can then miss out on opportunities. You win some and you lose some, right? as part of the markets. Let's move on to our next zone, which is this final zone that we have before the market close, right? And let's have a look and clear up the charts. Same as always, start on your left before going to your right hand side. We have the formation of a swing high. Swing high lets you know that you have a level of resistance or an area of supply, meaning that sellers are camped within this particular region of the market, right? That understanding, then pull out your Fibonacci tool, forecast this entire move to the upside, and we are just looking for a close below 50%, which was given to us by this bearish candlestick that we have, right? And upon a close of that candle, what we then realize is that we need a close above that high before we could take a position, right? And let's have a look. Now we reforecast our Fibonacci, right? And that's a very tight stop loss to use, but let's extend it further back. And what we can then see again is that price or our forecasts sit well within our range, right? So our minimum of 1:1 sits before our resistance zone, okay, and 1:2 then sits within our zone, right? So taking this trade, you could have taken a buy on the close of this bullish candlestick and used a positive stop once your 1:1 was hit, and that would have then come back and stopped you out on the close of this bearish candle, right? Your partial position would have been closed on your positive stop, and that's how you would have taken this particular setup, right? Let's move on to a higher time frame. So what we can then see is that we had a very bullish day for the United States dollar against the Mexican peso on this Monday, right? We had 4 trading setups and only 3 were worth taking, because when we dived deeper using our analysis, we then saw that it's only 3 of them that meet our criteria to take the trade. And that's your simple Monday for the United States against the Mexican peso. With that said, we have come to the end of this episode. If you found this video to be very insightful and it added some knowledge to the way you understand price charts, please do like the video. If you have a particular currency pair that you'd like me to look at, please do suggest it in the comment section of the video, and I will make sure to analyze it in the next episode. Just to let you know, this pair was hinted to me by a particular viewer, and this is my response to how they would have traded this particular pair on this Monday. So I hope that they found this very insightful too, right? And thank you again for your contribution and your suggestion for this pair, right? I rarely look at the exotic currency pairs, right? But my strategy applies on every currency pair, right? So there we go. That's how you would have traded it on that Monday. Ladies and gentlemen, if you have subscribed or if you are in the process of subscribing, please do hit the bell notification icon so that you can be alerted every time I upload a new episode. That brings us to the end. Thank you for watching this episode of Market Replay. I'll see you on the next one.